Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Sanjana Prabhakar with Index Investment Intelligence with Nasdaq for an update on the Inflation Reduction Act 1 year after the enactment and related investments. Sanjana, it's great to see you as always. Welcome back to Trade Talks. And certainly we're seeing the impact that the IRA has made.
Yes, absolutely, Jill. As you mentioned, it's been 1 year since the enactment of the Act. We have highlighted some of the key provisions of the IRA in our previous trade talks and the companies that are likely to benefit from it. This time around, wanted to provide an update into the tremendous impact that the IRA has already had. And if you recall, the initial sentiment towards the passage of the Act was overwhelmingly positive. And as you can see in our first slide here, we go into details into some of the major announcements that have been made since the passage of the IRA. And as you can see, the IRA has spurred private investments to the tune of more than $110 billion, including $70 billion for EVs and $10 billion for solar manufacturing. Those are pretty sizable investments. And as you can see, the economic impact is very impressive as well. 170,000 jobs have already been created, with 1.5 million jobs expected to be created over the next decade. EV sales are already up 50% year over year in the first quarter of 2023, and that speaks to how effective the IRA has been in incentivizing the production of EVs. And along with the bipartisan infrastructure law, the IRA is expected to enable the United States to reach 80% clean electricity generation by 2030. Wind energy is expected to triple over this period, and solar is expected to increase 7 to 8 times by 2030, according to Department of Energy estimates. So that's pretty impressive as well. And what I really wanted to highlight here is that the impact is not limited just to job creation, but extends to other measures as well. We have seen forecasts being revised upwards for emission reductions. Emissions are now expected to reduce by 40% by 2030. And initial estimates of tax credits actually appear to be conservative, and that's what we have highlighted in our final box here. Initially, it was estimated that about $270 billion of tax credits will be rolled out. And it appears that businesses are likely to take advantage of these credits far more aggressively, and there is a possibility that the federal government will pay out 3 to 4 times more.
And Sanjana, on your following slide, you have it broken down by specific benefits to companies.
Yes, so this slide here captures some of the companies that make up the sales index, which are likely to benefit from the IRA. We have a number of companies that have already made announcements. For example, Tesla has announced that it will invest $770 million to expand its Austin EV factory, while it plans to spend another $3.6 billion to expand its Nevada Gigafactory. And benefits are accruing to a number of players, not just across EVs, but across solar manufacturing and lithium production as well. For example, solar is expected to benefit quite significantly. You see NextEra Energy, which is expecting solar capacity to more than double versus 2022 levels. And Maxion, which is a spin-off from SunPower, which is planning to spend more than $1 billion to build a solar cell and panel factory in New Mexico. Lithium production is also expected to increase, and you have a company that has announced a new lithium processing mega site in the US. And what's worth noting is that the IRA is game-changing, not just in terms of benefiting production, but also in terms of shortening the payback period for the investments.
And finally, when we take a look at valuations within this index, how do they compare to others?
Yeah, sure. So this slide here captures the valuation of the sales index versus the end of the year 2021. And as you can see in the 3 charts to the right, the index has become cheaper by 40 to 50%.
Actually, Sanjana, excuse me one moment. If we can get to the 3rd chart there so we can see the valuations. Perfect. Thank you.
Sure. So this chart here has the index valuations for the sales index. And as you can see in the 3 charts to the right, the index has become cheaper by 40 to 50% on a number of metrics, including PE, price to earnings, for companies with positive earnings, price to book, and EV to sales. For the same time period, if you notice, the index has dropped by 30% in terms of price. So what this suggests is that fundamentals of the sales index have actually been improving against a backdrop of unfavorable price performance. So what we really want to leave our viewers with is that over the long term, there's likely to be support from the policy environment for companies that make up the index, sector-specific headwinds that we've been hearing about, including, supply chain disruptions, a downturn in the semiconductor market, are likely to abate in the near to medium term.
All right, Sanjana, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much.